All right, we're going to go over the dollar index on this video. So like I said in a prior video, I was using the uh, DXY for the dollar index tracking, but recently found the US dollar symbol. And it seems to move a little more consistent and fluid. Um, I mean, there's not much difference here. I mean, this is the weekly. I'll show you a little bit more on the daily or on the hourly. Anyhow, I like this one. It's from FXCM, so it's a Forex broker. All right, so let's look in here. All right, looking at the weekly dollar, we can already tell right away. Wick, 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 wick. 4 wicks into this area, 122. 122, 4, 122. Okay, so that's a strong area of support. All right, we've rejected hard. So, um, I don't trade this symbol, but just use it to gauge the rest of the dollar crosses. Okay, it'll give you a good understanding for which direction these pairs are going to go. Okay, so we've got this nice zone here of support, and then we have obviously that giant area of liquidity there, the giant area of supply. We don't really need to mark that. That's really obvious. Anyhow, so let's go into the daily. Strong bounce to the upside after a couple weeks of selling of the dollar weakness. Which weakness in the dollar is expected right now because of the amount of money that's being printed in the U.S. Um, with all the stimulus checks, unemployment benefits, unemployment numbers are super high. So um, the dollar will weaken eventually, like way more than it is now, I would say. But the current status of the dollar is in retracement, so it's gaining strength. Okay. Um, it's went back down to the downside today, but we can see level here. Okay. Looking at the daily, strong level of resistance, support turned into resistance now. All right, that's going to be this level. All right, so we're going to hit our heads on that if we do continue to increase. Okay, and I don't see the dollar busting through that zone. Anyhow, rejected. Moving to the upside, let's go to the 4 hour. And we see strong movement reversed into an uptrend. So look at the structure. Lower high, lower high, lower high, lower high, lower low, lower low, lower low, lower low, lower high, lower low, higher high, higher low, higher high, higher low, higher high, higher low. Yeah, so we busted out. I mean, it's out of the range of the downtrend in the short term, and I have the levels marked already, so we'll just use what's marked. So this was actually that's not a level. This first level of resistance that it broke was there, okay? Busted through, retested. Now we need to break this, okay? We need to break that structure, and we did. Retraced here, and then this candle, shooting star, took us all the way through that zone into the next zone, or into the next structure, okay? Rejected, rejected, Look at that. Solid rejections there on the 4 hour. It does not want to go past that level. Yeah, so I mean, to me, looking a little deeper into this now, looking, it's looking like the weakness is gonna take over again. But we have to wait and see. We see the rejections here. It's just been stifled the past couple days, and now we have a nice bearish candle back into this zone, dipping its toes in, but it's rejecting. It's getting bought. Buyers are pushing, but not pushing enough, okay? 2 hours left, but look how much candle there is compared to wick. All right, that could change, but just noting that. 4 hour, let's go into that. So what we're gonna look at, it's in a tough spot right now, okay? If we want to go if we want to go bullish, if we want to continue this bullish run, we cannot break this arrow here. That's the low point. That's the most recent higher low that we cannot break. I mean, we could come down and test in this general area here. We could test there, but if we break that, we're looking to short the dollar pairs. Well, you would buy, you know, actually you would buy some and sell some, but anyway, short the dollar. So what that could look like, let me draw. We could have it come down. We could have it come down to this wick, 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 gather orders, and then shoot back up. That's one scenario. Another scenario is come down, wick, 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 bust through, retest. That's where the action would start. It would break and retest and then continue. Not saying to buy or sell anything on this, but that's when you would look to the other ones to make your moves. Okay, once it breaks that, you would look to the other pairs for a retest. Okay, you're not gonna look for the retest here to buy. You're just gonna look for the break here. Then you're gonna switch over to like GBP USD and go long because that dollar is going weak. You're gonna look for it to break a level like it has now, retest this level. So this is a good example, actually. So let's just compare. Let's just say, all right, let's use this as an example. The structure is still intact. Say it's not. Say this has broken the overall structure with this candle here, and now it's gone to retest. Okay, that's coming to retest. That's a retest. 30 minutes left in that candle. It'll work its way up. It'll reject. If that's going to be a retest. So when you see that, it breaks. Now you see the retest. You're like, okay, dollar's weakened. Let me go to the pair where I'm going to trade. Dollar's weakened, so you're going to say GU is going to go up. Dollar's going to go down. So then you can take it back to GU. And this is a level I have already made. This is why the levels are so important to draw and leave on that are relevant for the week or for the month. Because you can click, like that's the dollar index. You see the level, you see how it's reacting to that zone. Go to GU, that's the level. It's broken the zone. It's broken the zone here. The US dollar has broken the zone. Retesting. Retesting. All right. So they move in confluence. That's why the US dollar index is so valuable to analyze. Because it's going to lead you into the promised land for the major pairs. Anyhow, that's how you would do that. You look, and they look identical. Zones. It's at a zone. So what you would do for this trade to take it long, you're just waiting for rejection here. So it's really that simple. You're just looking for rejection. Not from, I mean, you can look at the 1 hour. You can wait for a rejection candle to close on the 1 hour. Um, but remember, we've already broken the zone and we've retested. So don't expect this to retest and then retest and then retest and then go. So it's broken, it's retested. It doesn't have to retest again. It doesn't even have to retest in general, but it's given us that chance to get in right now for the buy. So you see the break, and again, this is the 1 hour. So when you see a break and retest on a 1 hour, that's the go time. If you see a break on a 15, look, you see the break on the 15, nice break. But that's the retest? No. On a 15, you're going to wait a few more candles. A 15, you're going to wait a few more. Okay, it's not 4 to 5 candles. You're going to wait, okay, for that retest to complete. Because once that hour candle closes, that's a break. It takes another hour to retest. So 4 candles of 15 minutes. So we're on the third. And then, once these collect orders, then it'll shoot off to the upside. Okay, as long as it keeps rejecting here, which it should. It's looking like it's going to. You can go down to the 5 minute if you like. 5 minutes super clear if you know what you're looking for. You have to zoom way in, so you have to have all your structures drawn before you zoom into the 5 minute, because you can't just look at a 5 minute and know what's going on in the big picture. But we already know because we already have it drawn and we've already researched and done our work. So the break, and it's coming down strong for the retest, and it's starting to reject. Okay, we'll see a few more of these on the 5 minute, and then we'll see a blast off to the upside. Now, a target, if this continues, I'm not going to look for a target on a 5 minute. I mean, the only target I would look for on a 5 minute would be here. So I'm going to wait for a few more wicks, and I'd make this super tight, 5 pips or so, and then we would target the high. Okay, that's it. If you're going to scalp on the 5 minute, which you could. The thing is, the pips don't really matter. It's all about your risk. People think you need hundreds and hundreds of pips to make money, when the truth is you only need 2 or 3. Honestly, you only need a couple. Only problem is if you're only shooting for a few pips, you have to be accurate. You have to be super accurate, because look, I'm gonna risk 1% and I'm gonna gain 4%, but I'm only gonna earn 23 pips. Okay, how does that make sense if somebody's gaining 1% with like 150 pips? Okay, it's all about the risk reward. It's all about your position size and calculations. So here, I want a 1 to 4 risk reward. Okay, and I'm only getting 23 pips, but I can only lose 5. So this has to be ready to go, um, or else it's not gonna work out. Okay, so I could drop it a little more to give myself some more room. Say it comes down and tests that, or say it comes down and say I want to go below that. I mean, then my risk reward is off. If I'm just playing the 5 minute, I'm playing these wicks. I'm playing these wicks on the 5 minute, and once it starts to curl, I'm gonna set the stop below the lowest wick whenever that occurs, and then that's gonna be it. Um, like for instance, here, you know, um, it's not like a clear break and retest, but let's just yeah, let's use this one actually. Let me show you what we would do. So we come up, bust this prior level here, bust it, and then we retrace. All right, so we're gonna look for the lowest place to buy, and we got a couple low wicks here. Say we got that one. All right, that's the one we're targeting. That's the one we're buying off of. So I'm gonna set my stop loss below this one because it's the lowest one, all right? And then we've started to move up. So I'm thinking it's not gonna go any lower. So I'm gonna set it a few pips. I'll say like 6 pips. Okay, give us a little bit of breathing room because you're gonna want that. And then let's target that, the highest wick there. That's a 1 to 4. All right. Um, and that's it essentially. And look, it shot some wicks down. Okay, but nothing was really lower than that one. I mean, he had like a 1 pip, not even like a half pip there. But you risk 6 pips at a percent. I mean, that just the problem with that is you get it. It doesn't take much for you to lose that percent with a 6 pip stop, you know. So it's risky. It's more risky. But then look how it plays out. I mean, it just blasted. It blasted through here. And say you didn't take all your profit there, you just let it run. I mean, you're looking at a 1 to 7 risk reward in an hour. I mean, that's great. You can make 7% in an hour. So, you know, that's a way to trade. It's not really recommended for most people. You gotta be sitting at the chart for one. You have to be at the chart. And for two, you have to be willing to lose that money quick because it can happen. I mean, we have the pin bar, we have the doji here, so this would be, this would have been a good trade that I just set up. We'll see if it plays out, but right now you're already at a 1 to 1, I would assume. Yeah, you're already past a 1 to 1 here, so you can already, so if you're playing this, I would recommend taking the profit at a 1 to 1 just so that way you cover your loss. At least covering like take 70% or take 50% at a 1 to 1, or if not a 1 to 1, because that's not going to give you like a 1 to 1. If you take 50% at a 1 to 1, you're still going to lose money if it hits your stop. Okay, you're going to lose half percent, but you can look halfway. Okay, you can go halfway. So you can go like 10 or 11 pips, take that money, take that 50%, let the rest run. Okay, that covers your loss plus one, so you get a 1 to 2 return, and then you let the rest run out. I mean, yeah, you're not going to get your 1 to 7 return, but you're going to get a 1 to 2 plus a little more. So like a 1 to 3, 1 to 4 return, which is great for what? Like not even an hour worth of, not even an hour's worth of price action. So that's a way to trade. That's not the way I trade. Um, I might start working towards that a little more just to add to my returns. But yeah, it's not recommended for beginners because if you don't know what you're doing, if you don't know how to read the chart and read the candles, you don't leave yourself much room for error, and you're gonna lose a lot at first, especially if you're just trying to figure out Forex and figure out chart analysis, technical analysis, and everything. So yeah, I don't really recommend trading that way at first. The alternative is to do, trade from the 1 hour, trade from the 4 hour, where you have 50, 40, 30 pips of stop loss or 100. That's the best way to start, just because it gives you room for error. Like you might not see the zone exactly as it is. Um, when if you're trading a 1 hour or a 4 hour chart, you're gonna give yourself breathing room. You're gonna give the market breathing room to, you know, move and take those manipulative wicks because that happens. They'll wick you out. The brokers and the banks will see the stops, they'll wick them out, take them, take them out of the market and take their money, and then go in the direction that it was going to go in the first place. So you just have to be aware of little things like that if you're going to play on the small time frames, um, and you have to be willing to lose a lot. That's why I would risk a 1/4%. Like if you're scalping, playing that game 5, 6 pip stops, I'd risk a quarter or a 0.5%. I wouldn't risk a full percent because you're gonna get wicked out on those. But when you don't get wicked out on those, the returns are great. Like 1 to 7, easy, quick, within an hour. Turn that 1/4% into 2%. I mean, that's great. You can trade that way all day. You can lose 4 of those, win 1, and still be up 1%. So that's my take on the scalping. Breakouts. Breakouts are another scalping method. I've learned those as well. I don't like breakouts because I just I don't the risk reward is not there for me. I can never find a good area for my stop because I'm just trading based on the market and reacting to the market. So it's not, it's just not a sustainable way to trade for the long term. That's the thing you have to look at as well. Is this sustainable? Is this, can I do this every day for the rest of my life with breakout trading, with scalping like this? I mean, like scalping like this that's on the screen right now, yeah, you can probably get away with that for the rest of your life. Like you can wake up, look at a chart for a few hours a day and be done. With the breakout trading, you have to wake up. Say you want to trade London. So say you live in Florida, you want to trade the London session every day. You got to be up at like, well, first off, you got to be up at like 2 a.m., 3 a.m. to catch it. You can't just wake up right when the market opens and be on the computer. You gotta be up a little bit before to wake up, get your mind right. And you trade London from like 3 a.m. till 5, 3 a.m. till 6, something like that. I know guys that do that. They do well, make a lot of money. But yeah, you know, it's a lifestyle choice, really. The way I trade, the way I've been trading recently, wake up, um, and just basically analyze between London and US session, between like 6 and 8 a.m. Eastern time. You can uh, you can usually catch the market at like a dead time between 6 and 8. Get a good analysis in for the day for the upcoming session, and then yeah, that's it. I mean, I'll trade hard. I'll analyze and trade until about 1 p.m. Eastern time. That's when London goes home for the day, and it'll trickle into like 3 or 4 the U.S. session. But anything beyond that, I'm done. I'm not entering trades. I might hold a trade, but I'm really looking to enter a trade between like 8 and 11. Not really trying to get in the market after that. I'll be in the market and stay in the market throughout the day, throughout a couple of days. But I'm not trying to get in the market after 11 unless it's just a super obvious setup. All right, so let's have a look here. This has been playing out pretty nice. I mean, you can see I got stopped out. So that's the risk you run. Like, that's the risk you run with this scalping. Like we had that super good doji on a 5 minute. We're like, okay, let's set the stop below and let's go. And it went. It went to a 1-to-1, but then look, the next candle stopped them out, stopped us out. So we would need to be below what? Be below there? But what is that? I mean, you can't know where to put that. There's no structure. So that's why it's risky because you're just basing it based on the last candle, and that's risky because you don't know what the next one's going to hold. So if there's no structure, like the structure's here, okay, it can come down as far as here to retest, and it hasn't even made it yet, okay? So to be safe, you would really like to be able to walk away and be safe with that trade. You would have to be in this general area because look what happens. I mean, it comes down, wicks you out with no warning, like, and then just takes off. Okay, so maybe, yeah, maybe if you scalp this pair a lot, you know, like, hey, it's gonna wick. You know, I'm gonna give myself a good 10 pip wick before I enter this trade. So yeah, like take the lowest wick and go 10, so 12. We have a 12 pip stop. So you could do that. You could set a 12, set a 10 pip stop from here, and then just wait. Just wait for it to get close to your stop loss, and then you could enter. Um, Either way, I mean, it's just something you would have to practice. Okay, but look, I mean, it is, you know, this ended up not being like a 1-to-4, but say I got stopped out and re-entered like at the close, or at not the close, but say I re-entered on the way back up, like it's 1-to-2, you know, it's still probably gonna hit that target. All right, so anyhow, I'm going on a rant, but just wanted to show you the 5 minute chart and how you can play it, but you know, significant more risk playing this short of a time frame. And yeah, so back to the dollar. Let's see how the dollar reacted. We're on the 5 minute on the dollar. So what were we looking for? What were we looking for here? The break, the retest. Let's go back to the 15 minute. All right, let's go to the hour. Actually, that's what we were talking about. Waiting for that hour candle to close. So we did have the break. All right, and we did have a retest. It didn't go all the way into the white zone, but you can see here, this is a low that's been made, and it's retested that low. All right, now it's gone. So this is the hour candle that was retesting. Okay, we saw this breakout. This was gone before I started the video. This was retesting. This was blue a little bit ago. It retested and it's down. If it closes here, it's going to continue. It might give us another wick. You can jump in on that next wick. But it's pretty much gone. I mean, that's when you want to get in. All right. And then you can expect it to go down to the next lows. All right. It's going to retest. It's going to retest these lows. It's just, it needs to. It needs to retest to see what's going on, to see if there's orders, to see if there's buyers, see if there's demand. Same thing with GU. All right. So as you can see, we've hit the target already. I mean, that's great if you want to play 5 minute games. But same thing here. It's broken. It's retested. Now the candle's going to close with indecision if it stays like that, or if it goes up to be blue, we're going to look to buy, just like we're going to look to sell the dollar. But let's go back to the 5 minute. Oh, sorry, no, it didn't hit the target. It didn't hit the target. I misread that. But yeah, that's why it's just safer to play the 1 hour because you get, or a 30 minute even. 30-minute even. I mean, look, it broke it. It retested. Now we just need to see. I mean, it's still very indecisive here. But the 1 hour is clean, clear, crisp. Break, retest. We'll see how this closes. Okay, that's it. All right, guys. So, like we talked about, main objective for this week, looking at the 1 hour chart, looking at the 4 hour chart on the US dollar. We want to see rejection of this low before we go long. And before we go short, we want to see a break of this low. All right. So to go long, just to draw it again, I know this shit's confusing. Here, reject, up. That's going to be our long move. Our short move will be here. Wiggle, wiggle, break, retest, enter, bam. All right. 2 scenarios. Like I said, trading in the zone. You have to trade in the zone. This gray area, you don't want to be there. When you get down here, when the price comes to, oh, I'm drawing. You could trade in the gray, but it needs to show rejection. And it needs to be around this low area. So it can come into here, reject, 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 and then wick out of here. Okay? That'd show us strength in the dollar. And then we see the continuation of the downside from GU, NU, EU, AU, okay? All those G10 currencies, okay, that are connected to the dollar. So look, hourly on GU. Nice downward movement, lower high, lower low. Trying to form a lower high, we'll see. For GU, we're gonna have to break this to go long. Okay? And then to go low, to go on a sell, we're gonna need to make a new low. Okay? I'm not saying don't sell until you get here, but we'll have to break that to continue the downtrend. We'll have to break that to continue this uptrend. We're in no man's land. Okay? Looking to trade in the zone at a horizontal level with rejection. So it's broken our level. Next level, we're at it. We're at it. All of this. We can reject any time through this as long as we're below this structure. If you like trend lines, you can draw trend lines. So when you draw a trend line, you want to go from the highest candle wick. So the highest candle closure and the wick of that candle. You're not going to want to draw a trend line from this news wick. Okay? It closed down here. If it closed up here, yeah, trend. Candle closed here, highest one there. Draw your trend. Draw the trend to the next high. Here, 1, 2, go through. 1, 2, go through. So line it up with that wick and go through. All right. So look, it's broken the trend. Now trend lines aren't everything. It does show you, some currencies respect the trend lines fantastic, but say somebody draws it from here, it's not broken. Say somebody draws it from the body, it's broken. The thing about trend lines is they all have to be, it's a subjective thing. It's a subjective measuring tool. So say somebody measures it from that wick. They say, oh, that's the next high. 1, 2, 1, 2, go through. Line it up with that. I'm going to go through. It already broke here. Oh, why didn't it go long? So it's subjective, really. You can take it if I'm gonna draw it, if I was gonna draw it and abide by it, I'd hit this high, 1, 2, and I'd go through. All right. So this candle's not closed. It's gonna close. It's gonna be bullish, but it's still not. I'm not gonna take a buy based on that. Okay, if I'm playing the trend line, if I'm playing the trend line on the hourly, I see the break of the zone. I see the break of the trend line. Okay, those are two good confluences. Those are two good confirmations that this thing's going to keep going up. We're going to get weakness in the dollar. But to confirm, because it's all about probability, you want it to break. You want that to close. Ideally, you want it to close a little bit more than a doji looking candle because that's not enough evidence really. Anyhow, closes. You want it to come back, retest this zone, retest this trend line. And look, if it retests the trend line and the zone and the trend line form around the same level, that's a go. That is a buy. You can't get any more confident and confidence behind your purchase, behind your buy, behind your order, behind your position than that. If it comes together at the same area, you've drawn your zones, you've drawn your trend, you've seen the break, you've seen the break, you've seen the retest, you've seen the rejection here. You need to see, you need to see, you need to see rejection. Oh shit. Okay, that was supposed to be a candle with a wick. Anyhow, if you see a candle rejecting with a wick, maybe two, maybe three, maybe one, you can take a buy. You can take a buy there and buy it off the trend, buy it off the rejection of the horizontal level. Set your stop below the level. So you could set it below this level. You could set it below this level. You could set it below this level. Okay. Now, if you set it 100 pips away, you're gonna be looking for big moves. You're gonna be looking to target that one. Have a 2 to 1. Okay, which is great. That's gonna be the end target anyway and beyond. But yeah, for safe entry, for letting it have room to breathe, this would be ideal. Now, if you don't want to give it that much room, say you're looking at it and you're like, well, it's in an uptrend. If it breaks this low, I'm out. So you can set it, 5 pips below that. And then look, you're probably still going to target that area. You can target this area. You can target this area. You can target this area. I mean, this one will be a struggle. Look left. Look here. Okay? Resistance. Support, actually, sorry. Support, resistance. So you're going to struggle there. You can set your first target there, 1 to 3. Second target here. Maybe second target here. Resistance, support. Third target here. Okay? So you can have 3 targets here on the long. But it has to break, it has to retest, it has to reject, and then you can get in. So there's a couple more things that need to happen, all right? All right, guys, that's going to be it. That was super long. I'm going to break this up into a couple videos, and it's going to be posted soon.